Today's webcast is brought to you by Texas-based Independence Title, a member of the 5-Star Title and Closing Coalition. The chair of the Federal Reserve said a federal funds rate increase is likely before the end of the year if the economic conditions continue to improve and Fannie Mae reaches a milestone in credit risk sharing. Ahead on Monday's News Wrap. Federal Reserve Chair Janet Yellen addressed the subject of the much-anticipated federal funds range increase in 2 separate congressional hearings this week. Yellen said that the more economic improvement, particularly in the labor market, is needed along with confidence that the objective of 2% inflation can be met over the medium term. She said the Federal Open Market Committee would determine on a meeting-by-meeting basis if progress towards that goal is sufficient enough to raise the rates. The target range for the federal funds rate has remained near zero since December 2008, right at the beginning of the financial crisis. Senate Bank Committee Chairman Richard Shelby said that the Fed's continuing to hold interest rates down could have an adverse effect on the economy, particularly on household savings. Shelby noted that the FOMC has stated it would adjust its interest rate policy when the unemployment rate fell below 5.6%. The BLS reported an unemployment rate of 5.3% in June. With the announcement of the $1.56 billion credit risk sharing transaction under the Connecticut Avenue Security Series, Fannie Mae has now issued $10 billion in notes on single-family mortgage loans through CAS, totaling more than $390 billion since the program began in October 2013. The transaction is a step for Fannie Mae towards increasing the role of a private capital in the mortgage market through credit risk transactions in order to reduce taxpayer risk as set forth by the conservator, the Federal Housing Financial Agency. You can check out these stories on the latest happenings in the industry right here on our site. Thanks for joining us. We'll see you again on Tuesday. Until then, stay with DSNews.com for all of your most relevant default servicing news.